Yes, guys. Welcome again to another another video, and I think this will be the weekly outlook of this other coming week. I think from Monday, let's see, for Monday 27th, yeah, from Monday 27th onwards to Friday. So what I need to do here, to clear everything, because I've already done my weekly outlook, what happened last week, how I did got involved in these shorts. You can see many markups there, and how I did go about them. So this in the prior video, go get it, go review how I actually got my positions. And now this time, let's get to eliminate everything and start my analysis of well, or from zero. So what we have here, these US 100. I want to be looking at US 100, and where am I really expecting, what will be my targets, what is my context area. What I mean by context area, from what levels am I really expecting to see a drop off, right? Because we usually anticipate the power of 3, whereby we have some accumulation, we have the manipulation, and then we have the real move happening later on. So that's what I want us to identify, and then we can see how we can get to interact with this market. We have 2 days, as you can see from the charts. Sorry guys if my voice is off. uh, I got some flu, but I'm healing, so sorry for that. So from the monthly time frame, what you can see is currently this candle is really expanding lower. We are seeing lower prices, and even if I take it further to the 3-month time frame, is currently we are trading inside a 3-month candle, fair value gap, I mean. And this is the fair value gap that the market is currently trading in. No, I want to use these other tool. So this is the current 3-month fair value gap. That was my initial target. If you can go back to my videos, this was my initial target. But again, now we have these also 3-month fair value gap there. Let me label it. So 3-month FVG, so should be at the bottom. Bottom right. So we have that 3-month FVG that is there, which most likely am I expecting to see the market retrace into it. You can see we have been having a nice bullish structures over here. From these fair value gap, the market didn't really trade into it. Then we expanded higher, forming these order block. We left a gap here, the market traded higher, but now it's time we are retracing into it, and to see whether it's high probability for us to trade, or for me maybe to see this fair value gap being traded into. I usually want to see where is it located within. So from the range high to the range low, you can see from this high, and to make things tighter from the lower time frame, I need to have it there. From this range low right there to this high, we can see this fair value gap is within the premium levels, right? For us to continue buying, we want to see the market drop at least to the discount levels, and then continue buying. A good example is this level over here. Good example was this, from this price leg over here, from the low to the high, that at that moment in time was created here, because this move happened after the market had retraced. We opened, we rallied lower to create the low, then we rallied higher, meaning this wasn't the real high, the initial high. The range high was these relative equal highs, but we traded towards the discount levels, then we bought off from there. So that's what I actually also intend to see. Are we likely to trade to discount? Because for me to be involved in buys, that's what I actually want to see. Market drop to discount levels where prices are cheaper, then the market expand higher. That's what I intend to see. And so if I'm having these 3-month fair value gap above the 50% level, above the discount level, then to me this is most likely expecting. Let me see my lighting. This more likely maybe to be traded into. Then from there we can be watching what will be happening around that order block. And since we have that 3 month fair value cap, what else, before we reach there, what else do we have that can be traded into before that level is actually traded into? So the 3 month fair value cap aligns nicely with that monthly fair value cap, so I'll leave it at that moment in time. And currently what we are seeing is this is the 3 month fair value cap that had already been traded into. We are expanding nicely lower, and we have this gap left open. Let's see, is there anything before that we can expect to see the market gravitate to? And since we're in close proximity, can we expect just the market tanking lower to that level? We have also other gaps within this range, within the order blocks. So is it likely that we might see prices drop deeper into this level? We actually don't know. Want to see the reactions from this level, then we can see whether we can maybe trade into deeper discount towards these other monthly fair value gaps, dropping deeper into the weekly. Now since we have the direction, or to the level whereby we want to see the market tank to, right? We had these relative equal lows that were my last week target. Actually, they were met, and now this is the range, this is the level, also weekly fair value cap, which is more likely that we might see price deliver to, since we have the direction number one. Now what we want to see or to identify is the context area. From what levels are we likely to expect the market drop to, right? From, I mean, not to. We have the direction, which is the to, and now we want to identify the from. Now the from that's a little bit now that's where things get nitty gritty. And now since we did expand with this candle dropping lower, we have this immediate rebalance. So I can get rid of this level, or can just have it there to have the charts clean. Let me have this pulled higher, this to come at that level to signal as a market structure shift. So this can be our market structure shift, labeled here, right there. We can have this labeled as our, can be more bottom center, as our market structure shift, our bearish market structure shift. There we go. So since we have that market structure shift, and we have our draw as this weekly fair value gap, also a monthly fair value gap, as well as a monthly fair value gap inside premium, and since we are in premium, we would want really to see price drop towards discount levels. So having that, where can we have our context area? My context area, usually I want to label imbalances or gaps. And for this situation over here, label this line over here a red dotted line, that to mark this my immediate rebalance. So the market might rally up to prevent creating an imbalance. So we have the wicks overlapping. Then we have seen those scenes happening multiple times. A good situation is this, whereby this candle opened, rallied higher, created an immediate rebalance, then we rejected lower. Since then we have been dropping lower. We didn't really form a fair value gap there because we had those two lines overlapping. Also, another good instance for that situation is this level. This we had a gap left open, but for this we had this first candle and the third candle overlapping, then we had the continuation going higher. So are we likely to see maybe the market push back into these levels? And what else do I notice is we have that volume imbalance from the bodies of these two candles. We have that volume imbalance there, which to me, this color is what signals my volume imbalance. Are we likely to see the market trade into that volume imbalance? But let's see whether NQ has it right there. NQ also has the gap. It's a wider range gap from this candle closing price to this candle opening. So we have this big gap over there. But are we likely to see the market rally to those levels? Let's go deeper and also see whether from the lower time frames we have anything. Also from US 500, we also have the gap left open. A good example of that gap is this, whereby we created that gap. The market rallied last week, traded into that 50% of the gap, and that's where we rejected from, right? So that's how I usually use them. And for this situation, I have this one labeled over there. And now let's find from the daily time frame whether we have anything aligning with that key levels. So this is the fib levels that we had. Now I need to make it tighter to avoid many markings or big ranges. Need to make it even more tighter. All right, so there we go, right there. So we are in premium. As you can see, we have that gap, and that gap is well balanced with a daily fair value gap over there. So we can label it as 2 in 1. And what I'll be praying for is we have a big move going higher. Also, we can see that we have this it's a fair value area paired with an order block. In this zone we have an order block, right? We have a daily fair value gap, we have a weekly volume imbalance, we also have a daily fair value gap or a weekly IR also. So this to me it's is a spot that I'll be really wanting to see price push higher first. Then from those levels I can maybe try to see whether we can continue to our targets. But also let's label it first. That's weekly volume imbalance slash daily FVG in there. So having those noted there, and also somehow I can have a fair value areas, but I don't want to have many things. I'd really wish to see something like this last week, because Friday we closed up bearish. Want to see something like this into this daily fair value gap, same to this daily fair value gap, then a continuation lower. But to me, since we are in close proximity to the target, and most likely you can see how the market is really expanding, are we likely to go fast off there? We can be getting good probabilities or good RRs from this level, but is it likely that we see the market rally towards that level and continue? Let's see from the daily whether we have some other levels that the market can react off of. So we have a fair value gaps that were being formed within this range. So somehow the market just can react off one bearish fair value gap and continue lower. But since we are in close proximity, yeah, I like to see higher prices, something like this on Monday happening, a push, or we gap higher. I'd really want to see a gap higher, the market opening, gapping higher within this level over here. Then from there, if we get some nice captures going lower, then that will be nice towards these targets. But if we fail and we start displacing above these levels, the weekly daily imbalance and also the weekly volume imbalance, then we can expect continuations going higher. But for me, I'm leaning more of bearish on US 100, which is the pair that have been actually trading full time. And for gold, which I haven't really looked onto for a while, where you gold, there we are, come on. Alright, we are having gold over here, and let's see what is happening with gold from the monthly time frame. Alright, yeah, major liquidity pool, whatever I'd marked up prior, we have seen the major liquidity pool being taken. we are reversing, but that's not really 2 days before the market closes. Currently what we are seeing is from this chart is we have this candle high being swept. We have this liquidity sweep, and possibly we have a possible 3-month fair value gap, which I think will be created actually, because we're having 2 days. Is it likely that we might see that this range being filled? I don't think so. So most likely we have these as a possible three. Hasn't really been confirmed, but we'll refine it from the lower time frame. Possible 3-month FEG. There we go. And nothing much. We also have another 3-month fair value gap below it, which has actually been confirmed. So we can label it as a 3-month FEG. This has been fully confirmed. Now with that, this is a liquidity sweep. I'll label it further. Let's drop to the monthly time frame. Alright, from the monthly time frame, what you can see, we have 2 days before this candle closes, and since we haven't really confirmed this as a 3-month FEG, I guess we can get rid of it. The one confirmed is this. And what are we seeing? Currently this candle is trading below this sweep over here. We had created an immediate rebalance that was to push prices towards those highs, but this immediate rebalance failed, right? So what we had is this candle sweeping the prior candle high, tanking lower. Though we have this rejection, it doesn't mean that we might be going higher. Now the question I usually ask myself within this price move, if the market was really bullish, why did we create this immediate rebalance, push higher, and then fail to take these highs, right? So it was really a fake move going higher, but now is this maybe the real move happening currently? We actually don't know from this uh, current current chart that I'm observing. And also if I try to go further even to the 6 month, we have been seeing gold really surge higher, pushing higher, and with these retracements, where are we within the fib levels? So from the low that initiated the push going higher, right, that low, to this high, currently we are also in deep premium, right? For us to continue buying, we have these gaps left open here. Are we likely to see the market drop towards those levels and then continue higher sooner or later? That we don't know. That we need to observe. Currently that's where we have the market. And from the monthly, we have seen these current month sweep the prior candle high and then reject going lower, though we are reacting over also imbalances over here. So these can be the pump on the road, maybe a rejection, then later on we can see what will be happening, since you can see that 3-month fair value gap is within the premium levels. So let me adjust this. Seems to be too wide. Want it to be too narrow. Want it to be narrow to avoid having lots of markups. Yeah, this is what I want right there. So we have swept this major liquidity pool, and something else we are reacting off is this imbalance. Are we likely to see maybe a reaction of this level going higher, or we can expect to see the market drop to this even monthly fair value gap? That we will observe from the lower time frames. And let's see the structure, how the structure is aligning from the weekly, because with it we can predetermine whether the market is indeed bearish or we are bullish. So what's happening here is that the sweep that we talked about. Let me delete some of the stuff that I've been having, and these fair value gaps have been failing to push prices higher towards these specific levels. We have failed to see these nice pushes higher. to take these highs, but we saw that reversal, and this reversal has confirmed a market structure shift because we have this candle. This candle is actually closing below these bullish bodies, right? These bullish candles bodies, you can see, and also confirming a bearish fair value gap. These are signals that we might be bearish because we are forming lower highs as well as some displacement with fair value gaps. And this last week we created that fair value gap, and now you've seen these liquidity pools being taken, and the first target before we see the monthly fair value gap being taken, this will be the first target. I think gold is showing some nice moves, so we have these as a previous week's low. Yeah, we have the previous week's low there. Bottom right, I need to have it right. Yeah, so if you are bearish, the first target before we reach these levels will be at the previous week's low. Then I can refine further towards even these lows, refine towards blunder them, yeah, towards those lows. Yeah, from the fair value gap, let me have that because we've talked about it. Let me have this weekly fair value gap being marked on. Yeah, there we go, and my fair value gaps are always like this. Weekly FEG, there we go. So that's what, from that, I think this will be my context area. From that level, with this last week rejection, want to see maybe the market trade into these levels and then start tanking lower. And does the daily confirm that, or was the daily doing? The daily also is aligning on well. We have nice structure, bearish structure from the leg, the OTE leg of this over here. We reacted deeper, then we started forming bearish fair value gaps. The market has been actually displacing from those levels. So from these, within this area, if I can also decide to have my fib level, yeah, let me use that highest high towards this lowest low and ensure that it's kind of small. Yeah, I want to see our price reacting towards above, maybe within this area. We can just surge slightly higher, then from there want to see how price will be reacting towards this level. But my context area will be this weekly fair value gap over here, and then see whether we can push prices towards the previous week's low as well as that monthly fair value gap labeled below. So that is it. That's what I will be watching for gold. I think I might be taking a trade on gold this time, but yeah, we'll see how things will just line up until price has reached my specific level. Then I look into gold, but if it doesn't, I will majorly focus on US 100 only because I've been having nice success of it. So that's what I'm expecting, and looking forward to this coming week. And before we get to finish off, yeah, I think, yeah, to the OTE levels, we have these other gaps being left. I really want to see price push higher, right? Maybe towards this imbalance over here, and then tank lower or start showing signs of bearish from those levels. So are we likely to see price deliver to those highs and then continue lower? I actually don't know, but we'll react to what price will be doing, and I wish that we see the market gap higher. If I see a gap higher, I'll be really so excited. So that is it for this video, and before we get to close off, let's see. The Forex Factory, what we actually have. For this week, on Fetcher on Monday 10 a.m. 10:30 a.m. we have Red Folder News, which is really exciting to see. Tuesday we have Jobs. On Wednesday we have non-farm payroll. So it's a week to be really careful. 8:15. On Thursday, then we have unemployment on Friday. So it's a really exciting week. We have March Red Folder News this week. So want to see, but since I have my key levels, that's what really matters. And we want to avoid NFP. NFP is what we'll be keen on, but yeah, I'm expecting some volatilities this week, so let's keep tuned in. Let's see what the market will be presenting to us. So guys, thank you for being around, thank you for having me around, thank you for watching this video. Remember to like and subscribe. So until next time, be safe.